Brian Brady with Matthews Capital Markets in Tampa. As you guys know, I'm a commercial real estate loan broker. I secure financing for commercial real estate investors across the country, asset classes like apartment houses / multifamily, retail, shopping centers or Dollar General, single tenant net lease, industrial buildings, hotels, and even some medical offices. Capital's coming back. Lenders want to lend. They're behind their allocation this year, and they're trying to put money out on the street. That's good news. So we're starting to see banks, insurance companies, and a lot of the prime lenders out there who were really nervous to deploy capital into commercial real estate for the last year and a half. They're starting to loosen up a little bit. So that's good news. Here's the great news. The rates are also getting better. And this is what I want to talk to you about today. The key word for today is you need to be thinking about FOMO, fear of missing out. FOMO. You need to get some FOMO right now because the getting's good. And let me explain to you what I'm talking about. Just in the last 4 days, we've seen rates get tremendously better, and I think it's a head fake. Like I talked about last December, the Federal Reserve Bank met Wednesday, and rates started getting a little better in anticipation of the Fed cutting as soon as September. Too many people are paying attention to Jerome Powell, and they're not reading the statements or the minutes. And as you guys all know, I read this stuff. I don't just take what the Fed Chairman Powell says on CNBC. I think it's important to actually know what the whole committee is thinking, because that's going to dictate monetary policy moving forward. So just in the last 3 or 4 days, we've seen the 10-year Treasury yield drop over 25 basis points. And today alone, it's down 15 basis points. I'm just going to pull this up, which I'm not going to show you, but I want to get an accurate reading. The 10-year right now is at 387. That's today. That's where it's trading literally a minute ago. As recently as let me go out here a week. A week ago, it was close to 4.2. So it's gone down 35 basis points, 15 basis points in just one day. The 5-year, which a lot of our loans trade off of, that's at a 3.708. And this is important, this 5-year, because a lot of the paper I write is 5-year paper. That was as high as almost 4.1. So that's come down 35 or 40 basis points as well. Why does this matter? So many of the loans we price are off the 5 or 10-year yield. They get locked at a spread. You saw me putting a lot of stuff on LinkedIn yesterday. A lot of the quotes that I was doing, I was on the phone talking to lots of people who were on the bubble about refinancing or executing a purchase, and rates were holding them up. And they were looking at rates of 6.75 to 7, as much as just as recently as 2 or 3 weeks ago. I have lenders now that are pricing 6.25 and below for investment real estate. But again, FOMO, fear of missing out. That's what you need in your life right now. Fear of missing out. Why? Because I think it's a head fake. Wednesday, everybody's getting all excited because Jerome Powell sees he could see a way to some cuts this year. But he cautioned everybody and said it won't be 50 basis points. We could see a 25 basis point cut. Well, the market's already dropped 35 basis points. And so the best Powell could have told you is that he'd be cutting 25 basis points. We've already run past that point. So we're playing with the house's money right now. So you should, if you're shopping alone, you should lock today or Monday and get while the getting's good. But here's the trick. They're still worried about inflation. And in some of the more introspective news stories about the Fed, they're talking about how the committee is divided for the first time. They're talking about future cuts. I don't think they're coming till 2025. They're talking about future cuts, but they're not all in agreement. And so there's a small minority of the Federal Open Market Committee, the Federal Reserve Open Market Committee, that's talking about rate cuts. But the other ones are hardliners. They're saying, hold on, inflation is not at our target 2%. Now, you could say, well, it's heading in the right direction, close enough. Well, close enough is how you reinflate bubbles. And so that's why I think the Fed's being a little bit introspective. FOMO. You should have some FOMO in your life. You need to get while the getting's good if you've got debt maturing in the next 3 or 4 months, or you're trying to buy a property. In the next few days, you're going to have a chance to lock an investment real estate loan for a retail or an industrial property below 6.25% or lower. And if you wait, I think it's going to be gone in about a month or two. So a lot of people I talked to yesterday and this morning, are saying, let's wait and see if they go lower. Well, that's fine. You could do that, but I think you're going to be sorely sad and unhappy when you realize that this little gift that Jerome Powell's giving the markets is, once they digest the news, they're going to say, whoops, Fed's probably not going to cut in September. We may not get cuts till 2025, and we certainly aren't going to get a 50 basis point cut. And when that happens, this thing will whipsaw, and this 5-year Treasury at 3.7 right now will whipsaw back up to 4.1, and you won't be getting 6 1/4. You'll be getting 6 3/4. Anyway, have a great weekend. If you're looking at me on LinkedIn, my phone number is right on the page. Give me a call. Take care.